Stick around because this is gonna surprise you. All right, let's talk about what's going on with these new apartment buildings popping up. Because if you've been driving around lately, you've probably thought, dang, they're building another one? You're not imagining it. In 2024, we had over 520,000 new apartment units delivered across the US. That's the biggest spike in new construction since the 1970s. And now in 2025, we're getting hit with another big wave. So of course, everyone's asking, are we overbuilding? Are rents about to drop? And is now a good time to make a move? Let's break it down. Nationally, here's what the pipeline looks like. 500,000 new units last year. 500,000 more this year. Then in 2026, that number starts dropping. By 2027, it's projected to hit a low point, around 327,000 units. Now, to keep things balanced, we typically need about 300 to 350,000 new units a year. So right now, we're a little over that mark, but it's not going to last because after this current surge, new construction is slowing way down. Why? Well, it's just more expensive to build right now. Interest rates are high, lenders are picky, material and labor costs are still up, and developers, a lot of them are sitting on the sidelines waiting things out. So yeah, short-term oversupply, but longer term, we could actually be headed for another shortage by 2027 to 2029. Now let's talk rents because this is where people really start paying attention. Nationally, vacancy rates are creeping up. Right now, we're at about 8.9%. Rent growth is softening, and in some places, it's even pulling back. Landlords are offering more incentives too. Free rent, gift cards, flexible lease terms, the whole nine. If you're renting, that's good news. This might be the best time in a while to negotiate something solid. But if you're an investor, this is when being selective really matters because not every market is feeling the slowdown the same way. Let's take it home to San Diego, where the numbers look totally different. In 2024, we had about 5,300 units. In 2025, we're expecting just under 3,000, and now less than 500 of those are downtown. At the same time, vacancy rates here are holding steady around 4.9%. Rents have barely moved, only down about 1.1%, and the average rent still sitting at around $2,430 a month. Now, you might see a few deals out there. Some buildings are offering 4 to 6 weeks free, but overall, San Diego's still super tight. And honestly, it's probably going to stay that way. We've got limited land, strict zoning laws, and demand that just keeps showing up. Now, zooming out a bit, the US is still short millions of units, especially in the affordable housing space. Most of what's being built right now is luxury A-class product, because that's what works from a financing and construction standpoint. So here's my advice. Timing really matters. If you're a renter, this is your chance to get a deal. Don't sleep on it. If you're an investor, pay attention to local supply. Some markets are going to get oversaturated. Others, like San Diego, won't. And if you're thinking about buying, know that shifts in the rental market can absolutely impact demand and affordability on the sales side too. So if you're trying to figure out your next move, whether it's buying, investing, refinancing, or just making sense of the headlines, shoot me a message. I'm always here to help break it down for you. Talk soon.